What is going on, everybody? It's January 22nd, 2024. Daily log episode over NQ and price action today. That was on the live stream. If you weren't there, then obviously this will be a review over price and a prediction going into tomorrow. So if you haven't watched the weekly forecast that I put out yesterday, I didn't put it on YouTube, but I did put it on my Twitter page. So make sure you follow me on Twitter. I know obviously some people don't like Twitter, but I do have a lot of information on there in regards to weekly forecasts and just things I post throughout the week. So I'd advise you at least to go over there. Looking at NQ, everything's still in alignment from the weekly forecast and what we've been looking at. For price to reach up an all-time highs, I talked about today, the beginning of the live stream, about the adjustment for the contract changes, especially for the continuous contract. So if you want the explanation for that, go over to the beginning of my live stream today. Nothing really significant today in terms of what happened. I can go over in review. That was just me kind of marking some things up. Overall is what I'm looking for. So this week we're looking for the strong liquidity here, which is resting at 17,708. If you look at the daily time frame, this is what I was kind of leaning towards today, going into the later portions of the session and looking at how the daily time frame would close. I think it's a really nice closure. I'm going to be just looking at if we can IOFED this tomorrow and then continue higher. Overall, that would be kind of my prediction and what we're looking at tomorrow and leading up into the buy side liquidity there. Looking at the 4-hour time frame, we're resting inside of the fair value gap here. And then there's a lower BISI that's resting underneath it. So the daily time frame fair value gap is the parent. So we'll have to see how far it wants to reach into the daily fair value gap in terms of looking at the 4-hour perspective, if it would want to reach into this lower one or just keep this open. Either one's fine. I'm open to both. Going into the session tomorrow, we'll have to just see. But overall, I'm going to be looking at higher prices and looking for that expansion higher going into tomorrow and Wednesday and Thursday. We have this 1-hour fair value gap down here that probably seems likable, or probable is the right word for price to reach into. I would like to see this one stay open. If we climb all the way down into this lower portion, that may be semi-problematic. I would prefer this one to stay open as a breakaway gap. So look for this one to stay open. If we reach into it, doesn't automatically mean that I'm disregarding the trade idea, but I would prefer this to stay open. And I prefer if we just slightly IOFED this 1 hour and we see an expansion higher towards yesterday's high, and then the buy side liquidity here, which would create all-time highs. If you go down to lower time frames and reviewing today in a nutshell, I kind of advise all of you to just take it slow today, especially coming off of a large expansion of last week, Thursday and Friday, the opening of yesterday on Sunday, the expansion higher again. On a Monday with no news event drivers, it just seemed lower probability to me. And in hindsight, of course, you can look at this and say where you could have shorted and position yourself. But in real time, I didn't find anything really high probability. And I thought it was a good learning day, a good psychology day overall, where if you were able to be disciplined enough to stay out of the market, I think it was a really rewarding day for you. If you're able to profit, that's fine too, and there's nothing wrong with that. But for me personally, in my style and the models that I look for and the conditions I look for, nothing was really ripe. So going into the session, there was already a buy side liquidity rate here. Then we dropped off lower, taking out sell side liquidity. Let me change these to blue real quick. So that's buy side liquidity. So we have buy side being ran once, and in all reality, before the open, so pre-session kind of open price action, this is a really clean, low resistance liquidity run signature that you want to see in price, and the type of price action you want to be a part of. That's real easy trading. This is what I'm looking for. I'm looking for something that's clearly one-sided. It's easy to get in the market. It's easy to get out of it. I don't have to sit through a lot of chop. These are the type of conditions I'm looking for. So if you're on a stream with me and you're like, man, what is he looking for? Why is he waiting so long? Why is he being so, just patient? It's because I'm looking for these type of conditions. And if you observe something like this is high resistance liquidity run where it's a lot of back and forth, a lot of retrading back to an inefficiency or a PD array, and taking a lot of time to displace to a drawn liquidity. I preferably don't want to be inside of that. I can trade inside of it if I'm forced to be inside of that corner, but I don't have to be. I don't have to have a gun to my head and forcing a trade. I think that's such a today I said it on stream is if I had a gun in my head, I was looking for lower prices, but you don't have a gun to your head. Most of you trade as if you have a gun to your head and somebody's telling you, you need to take a trade right now. You need to force a trade or your family dies. That's the mentality that most of you are trading like. And same with me. I traded like that as well. But once you become mature enough and experienced enough, you realize, you know what? There isn't a gun in my head. I don't need to force trades that aren't in my criteria or in my liking. Even if I can call a draw on liquidity and I can see where price is going, if the conditions are not ripe, if I don't want to sit through high resistance, I'm not going to do it. It's watching paint dry. It's boring. It's lethargic. It's tiring. I'm spending mental capital that I don't need to. So you become to a point where you're so confident and content with your model and what you're looking for that you know that you can wait for a day where it's low resistance, it's easy, it's clearly one-sided. I don't have a lot of worry. I'm not trailing my stop loss, taking partials, really hammering down on the position to where I'm worrying about it. In these type of conditions, I could just put on a position, move my stops to break even, and let it roll right into my draw on liquidity and my take profit. And that's that easy. And I get off the computer and I go about my day. Don't you want that? Don't you want that type of lifestyle where it's easy? That's something last year taught me going through ICT's live streams is I can pick and choose what conditions I operate in. And if I can do that, then I'm going to pick the easiest conditions to operate within. Why would I pick the hardest? Why would I make this trading career harder than it already is? So that's a little rant on basically an example of low resistance. It's easy, it's smooth. Of course, this is behind the open, so most people are not trading this. But if you were to put this inside of the silver bullet or a macro within the silver bullet, this is what you should be looking for. You see it, it displays quickly, nicely. You took out buy side liquidity. You had a market structure shift. You have an inversion fair value gap. You have a SIBI in here. There's a lot of confluences. Whatever meets your eye, and I'm not going to tell you, what you should be entering off of, but whatever catches your eye, you enter the market, and from 7:30 my time to 7:45, that's 15 minutes for 40 handles. Compared to something like this, if you entered inside of the SIBI and you're targeting the slowdown here, it would take you 35. I mean, there's some days where it takes an hour, 2 hours to displace to a draw on liquidity. So hopefully I'm getting that message clear and across to you. You should be looking for low resistance liquidity runs. And that's particularly what I was aiming towards today. And if I couldn't see that, then there was no reason. Fair value gap in here, this is a balanced price range. You have one pass higher, one pass lower. So balanced price range, wicking above it, but the body stayed beneath it. Telling the story in here. And of course, in hindsight, this looks like, man, that's a really easy short. But in real time, I could have made a case for both sides. As we're taking out the sell side multiple times. We had a decoupled market in the morning. Dollar index was really showing no support for terms of analyzing. So this in here is just something that I wouldn't want to be part of because you could be short, drops off lower, returns back to the SIBI. In real time, you may not be expecting this is just a reclaimed. You may be like, man, is it going to stop me out of break even? Is it going to rally higher to my stop loss? And this is where you're spending mental capital and you're becoming exhausted. When I talk about mental capital and spending it, it's basically just fatiguing yourself. So I'm trying to not fatigue myself. I'm trying to be energized for the right opportunity so I can use all that energy and that focus on a good opportunity. But in here, you saw ICT short. If you watched it on YouTube, to me, that's not my particular style. I would never have taken that trade in a million years. I don't think I ever will. And that's a point you'll come to when watching his content is you'll probably see some entries and be like, yeah, that just does not align with my personality. That doesn't align with what I would ever take in a million years. And it doesn't mean that you need to ever mold yourself into that, because you can skin a cat in thousands of ways with these concepts. So he entered on the idea of a breakaway gap staying open. So if you're ever inside of consolidation and you leave the consolidation, you can expect a breakaway gap to form. So if it's leaving the consolidation, you'll expect or anticipate breakaway gaps to form and stay open. So I believe that was his idea of going into it. I'm sure he was on like a 15-second chart, a 5-second chart. He just wasn't showing it, and entering off of something inside of this wick. And then he pyramided and kept entering in, which again, I mean, that takes some real confidence and balls per se to really get into that. I mean, he ended up putting about 25 or 30 contracts on NQ. I mean, he started with 7 and ended up at 25. I mean, it's ridiculous. It's a ridiculous amount of confidence. But after that, really nothing noteworthy. I think if anything in the PM session, there was a nice little sell-off in here where we just returned up into a higher premium. I want to see if it returned into this premium SIBI. So it looks like we, from this dealing range high down to the low, retraced up into a premium, dropped off lower, shifted market structure here, and returned into another fair value gap there. Which again, this is still an example of high resistance liquidity run. In real time, this is a very difficult condition to work in if you're not experienced with it, because it's constantly coming back to your entry and you're constantly saying, well, is this really the right idea? Is this really going to work? Because you could be short in here, drops off, you're targeting this low, returns back to your entry, drops off again. Just a shallow run underneath the sell side, returns into a fair value gap there if you see it, that little inefficiency, and just meanders around. So from this point here, this took basically an hour to deliver. In a low resistance liquidity run, it could take 5 minutes to deliver. So those are the type of conditions I'm looking for. If I have to operate underneath these conditions and I see that we're in a profile where I'm probably not going to get low resistance, then I have to be forced into my corner where I have to operate in that. But I don't see this week being like that, so I'm just not going to force my own self into that corner, if that makes sense, in terms of low resistance versus high resistance. I mean, if you look at the 1 minute, this whole day was very, very choppy. Still opportunities, nevertheless, but that's the point that you come into maturity with trading in these concepts. Is I'm just going to sit out those conditions and wait for something that's easier. Like, that's as simple as I can put it. Let me take a look at dollar index just so we go into tomorrow with a clear view. I'm still leaning with the idea of looking for a lower dollar, but today's closure wasn't beautiful. It's just very consolidational. It's just not doing much, which it's typical for Forex and even most majority markets to be inside of a consolidational profile during January. It's just a unique stance where index features are really volatile right now off the rip of the open of the year. So as we move into February and March, I'm sure this thing will open up and start spreading its wings to whatever side it decides to go. Even though I lean on the bearish idea, I'm not married to it. I can switch my bias, and if it ends up wanting to draw higher, then I just simply switch it with enough evidence. And what would that be? I would need a clear displacement higher, and either really wanting to target the buy side liquidity from last Wednesday's high or closing above this SIBI in here. And that would make the idea that, well, we're probably not going to head lower and we may want to head higher. So to me, it's kind of a 50-50 stance right now. I would really need a nice significant drop lower in here, closing underneath the SIBI, and then treat it as resistance to move off lower into the sell side. That would be the best case scenario, and giving me enough confidence to keep looking for lower dollar. So I hope you guys enjoyed. Hope you guys have been enjoying the live streams. I know ICT is going to be live streaming tomorrow. I'm still going to do my live stream, so whoever shows up, I appreciate you guys. I know if you don't tune in, you're on ICTs, I completely understand. So till tomorrow, good luck and good trading, everybody. Be safe.